This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to talk about the difference between actual cash value and replacement cost value, and why ACV by definition requires depreciation from replacement cost, and why you can only get from an insurance policy what you pay for. This case is a putative class action concerning a commercial property insurance policy. Schoening Investment LP alleged that the Cincinnati Casualty Company breached its insurance policy by undervaluing an actual cash value payment for a covered partial structural loss to one of its properties in Schoening Investment LP versus the Cincinnati Casualty Company, a March 13, 2025 decision of the United States District Court for the Southern District of Ohio. Schoening contended that the policy does not allow Cincinnati Casualty to deduct any amount for depreciation from the ACV payments due for partial structural losses. Schoening specifically challenged whether the insurer is entitled to deduct depreciation from such payments at all. This putative class action concerned a commercial property insurance policy and not an uncommon grievance, an insured's belief that its insurance policy entitles it to more money from its insurer than it received. Specifically, Plaintiff Schoening Investment LP alleged on behalf of itself and a putative class of insureds in Kentucky and Arizona that the defendant, the Cincinnati Casualty Company, breached its insurance policy by undervaluing an actual cash value payment it made to Schoening after Schoening suffered a covered partial structural loss to one of its properties. By partial structural loss, the court in Schoening means structural damage where estimated repair costs are lower than estimated replacement costs. The court applied Kentucky law, which holds that the interpretation of unambiguous terms in an insurance policy is a matter of law, and the court concluded that Schoening's depreciation-based challenge failed under the unambiguous policy terms. Schoening contended that Cincinnati Casualty breached its contract in one very specific way. According to Schoening, the policy it issued does not allow Cincinnati Casualty to deduct any amount for depreciation from the otherwise applicable ACV payments that would be due for partial structural losses. All Schoening challenges here is whether the insurer is entitled to deduct depreciation from such payments at all. Cincinnati Casualty contended that the policy terms are sufficiently unambiguous on the depreciation issue that the court should dismiss the suit. The court agreed. The policy informs the reader that phrases in quotation marks like actual cash value have special meaning as set forth in Section G definitions, and according to the definitions section, quote, actual cash value means replacement cost less a deduction that reflects depreciation, age, condition, and obsolescence, close quote. To survive a motion to dismiss, under Federal Rules of Civil Procedure 12b-6, a complaint must present sufficient facts to state a claim to relief that is plausible on its face. A claim has facial plausibility when the plaintiff pleads factual content that allows the court to draw the reasonable inference that the defendant is liable for the misconduct alleged. Schoening asked the court to manufacture a third valuation method for the policy, which it cannot do. Schoening seeks an ACV-based payment without a depreciation deduction that would mean that even without selecting the optional replacement cost coverage, insureds are covered under the policy for full replacement cost, or RCV. Further, because the insureds who select the optional replacement cost coverage can elect to receive ACV-based payments before making repairs, Schoening's reading of the ACV would entitle them to full replacement cost-based payments without depreciation, without, in fact, making any repairs directly contravening the policy wording. All told, the court found that under the unambiguous policy language, Cincinnati Casualty may deduct depreciation of materials from ACV calculations when evaluating partial structural loss claims. The optional coverage under the policy provides only two valuation methods, replacement cost and ACV. The latter, ACV, means replacement cost less a deduction that reflects depreciation, age, condition, and obsolescence. Replacement cost is payment without deduction for depreciation. Unless and until the insured repairs and replaces the covered property, the replacement cost-based measure is not available to the insured, and therefore the court agreed with Cincinnati Casualty that the policy unambiguously allows the insurer to deduct depreciation from ACV-based payments for partial structural losses, and consequently, the court granted the motion to dismiss Schoening's complaint with prejudice. In my opinion, Schoening's proposed reading would effectively grant insureds who did not pay for nor select the replacement cost coverage a premium cost greater than the premium when RCV is not selected, an entitlement to replacement cost coverage contrary to the policy terms and for which no one paid. Schoening tried by filing a class action to change the wording of the policy and give the class a benefit for which they did not pay. The court refused to rewrite the policies whose terms and conditions the plaintiff class accepted when they acquired their policy. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe to the blog then, and you will receive notice of every blog posting, usually 5, sometimes 6 a week, and you'll also gain access to the more than 5,000 blog postings. Please tell your friends and colleagues about this blog and the videos so that they too can subscribe. They're free. And if you're interested in further detail about insurance, insurance claims, insurance law, and insurance fraud, please consider, for a very small fee, subscribing to my Substack publication. Thank you for your attention.